Hello, and welcome to the Get to Know Hedge Fund Investing series with Carl, the Carl Investment Platform. We've put this series together for recently approved applicants on the Carl platform, investors, to help you hopefully make the best investment decision for your portfolio and sort through the hedge funds on our portfolio better and help you understand what you're looking at and where information is available to you. So these are going to be pretty short. The goal is around 5 minutes, while I will tell you some of them go into the 6-minute series. So please forgive me on that. But we hope to keep it around 5 minutes and help you at about 3 times a week go through the investments that we have on the platform today. We're putting together a weekly webinar, so you can always come to the webinar and get a lot of this information in one session, but not quite as much as we'll be able to do here. And then also there's always the Talk to Carl opportunity where you can talk to one of us one-on-one and go through what's happening within your own portfolio, and you can ask any questions that you have of the information we have available. So today it's pretty simple. I'm going to talk to you about the old world of hedge funds and the new world of hedge funds. The old world of hedge funds was pretty much institutions and the uber wealthy. They would have at least $1 million to put into a fund, but often tens of millions of dollars, a lot of money. And they would use their money manager to go and find out about hedge funds, because it's not something you could really Google and search and find out much information about the funds. Then they would do due diligence on the funds, right? And they would hire a firm to help them complete that due diligence. So we work with Aon, but they would hire a firm like that. And they would go through both the strategy of the hedge fund to make sure it's sound, and also there's a whole series of operational due diligence that funds go through. This is called institutional level due diligence, and it would cost an investor anywhere from $50,000 to $200,000 to complete due diligence on funds. And then an investor would choose a fund. And maybe they get to choose two, maybe they have enough investment dollars to choose more than one, but often it's a single fund, and they would put tens of millions of dollars into a single fund, and they would then lock up that money for anywhere from 6 months to multiple years, and often it was a year or more. So they would not have any liquidity on the funds for significant periods of time. They would then often get, if they're lucky, a monthly statement and sometimes just a quarterly statement to know how their investment is performing. And I mean, if you consider it, what does it really matter if your money's locked up? What are you going to do? So that's really the old world of hedge funds, that there's a lot of hurdles. And Carl has removed most of those due to the Jobs Act coming onto the scene around 2018. And that act allows hedge funds to market and advertise in more ways than they were able to before, specifically to accredited investors still. So there is still accreditation required for hedge funds. And this was great for the hedge funds. The hedge funds are very pleased. However, they're not structured for this. They are, they're in no way prepared to offer what's generally considered a retail hedge fund product to reach, millions of accredited investors. And so they were looking for a partner like Carl. And so we came on the scene to talk to the hedge funds, work with the hedge funds, and create a platform where they can offer their investment to make a retail offering. And what that means is that they're low. To be on the platform, the hedge fund has to agree to a low minimum, a very low minimum. So it's $20,000 to be on the Carl platform as an investor. That's the minimum total investment. But you could actually diversify that $20,000 into increments as low as $2,000. Now, we happen to have 5 funds on the platform today, so that would be as low as $4,000 right now, but we are adding funds every month or two. And so we expect to get up to 20 funds or so. So you will get up to that rate. So it's a really low minimum. You also have monthly liquidity. So you can make adjustments to your portfolio, or if you require cash out, you can make the distributions and withdrawals 12 times a year, once a month. And so that's significantly higher than the old world of hedge funds. So you have a low minimum, you have liquidity, and now you also have real-time data. I work a lot with our mobile app development. I'm more on the operations side of the business. And so I actually watch our mobile app all day and watch the gains and losses within my portfolio. I have a pretty diversified portfolio within Carl hedge funds. And I can watch how all the hedge funds are performing and how my portfolio is performing overall in real time. That is a huge change to the world of hedge funds, never really been seen before. And so you get a lot of information to make decisions about how you feel funds are performing and any adjustments you might want to make. And lastly, and maybe most importantly, because of the due diligence we do on the funds, it's critically important to us at Carl that funds are uncorrelated to common markets, and most common the stock market, but whatever market they are invested in, maybe commodities or foreign exchange. They need to be uncorrelated, and they need to have high gain targets in order to be on the platform. And this is important as we go into the next session in this series, because there's no reason to invest in a hedge fund if you're going to just, be correlated to the market and react in the same way that the market does. That's not really the purpose of hedge funds at all. So it's good to go to a marketplace where you know that there is a very high uncorrelation, right? There you have a reasonable standard that each fund is going to behave on its own, not only to the index, but to each other. This really helps with diversification and making sure that you can make the right useful utility decision for your portfolio within these investments. I'm going to go for today, and we will see you in the next session where we'll talk about how Carl completes due diligence on our funds. See you next time.